Hello and welcome to the Andrew Hines Real Estate Investing Podcast. Today I have on the show a very special guest, Jacob Perez. Jacob, how you doing?
Doing great. Thanks for having me.
Well, thanks for coming. So Jacob reached out to me on Instagram, and he shared a little bit about his story. And he's actually a pretty impressive investor. He's done a bunch of multifamily investing, and he's utilized something called a joint venture partnership, which he's going to tell us about today. And that's basically where you're acquiring a real estate portfolio, and you can either be the money partner or you're the working partner. Jacob's been the working partner for the most part, which means he's not the one investing the money, he's doing the work. And he's got a very impressive story. He's acquired a very impressive number of units, and now he's going to tell us about it. Okay, so Jacob, why don't you just tell me a little bit about what you're up to right now?
Cool. Yeah. Right now, I'm still investing in real estate pretty heavily. I also work as a mortgage agent, so sometimes that gets away in the investment strategy because you're busy and tied up with some other things. But right now, just looking to acquire a bit more properties with a few joint venture partners I still have lined up.
Nice. And how did you get started? Like where was when was the day that you said, okay, I'm going to start investing in real estate?
I think it was actually a long time ago. People all get into real estate for a lot of different reasons. For me specifically, I just heard the concept of what a rental property was when I was in high school. I didn't hear anything about appreciation, cash flow, tax write-offs, all these benefits that come with investment properties. All I heard was you can buy a property, rent it out for what your mortgage costs, and after 25 plus years, somebody has paid off your mortgage. And I remember thinking, that's a hilarious concept. I'm definitely going to do it without a doubt. And that was really it for me. So when I got my first job at a university, I started saving with the goal to have a 5% down payment to buy a rental property. Now, I didn't know that there was mortgage approvals involved. I didn't even know that you used a buying agent when buying properties. I thought you just called up the listing agent, went to go see a property and put in an offer. All you needed was 5%. So what I did was I looked for properties for about 1 year, started at 22 years old. And eventually when I was 23, I just built up the courage to put an offer on a property. I actually won in an offer competition using the listing realtor on the condo at the time that I purchased. And then I was asked, are we good to waive the condition of finance? And I realized, what's a condition of finance? I don't have a mortgage, I don't have anything like that. So what ended up happening was I went to my brother. He worked at CIBC at the time, a major bank in Canada for the US listeners. And he wasn't able to approve me for a mortgage. I knew somebody at TD Bank. He wasn't able to approve me for a mortgage. They referred me to a mortgage broker. He was able to get my deal done. And that was my introduction into real estate.
Nice. Yeah, it's funny. Everyone has their own unique story of that moment where it clicked, that moment where you're like, whoa, I got to do this. And I remember for me, it was kind of a similar story. I was in university, and if anyone's ever been to Western University, outside the gates, there's these 4 townhouses, 4 four-plexes side by side. And I was just calculating rough numbers. It was $2,500 a unit that they were getting. The landlord was getting. So I was crunching these numbers and I worked backwards, and I figured even if he's paying 50% tax, he was like netting like 130 grand a year off of one property. Mm-hmm. And I'm like, okay, if I had that, I'd like replace my family's whole income. And I'm like, okay, boom, I got to do this.
Yeah.
And it took me quite a few years to figure it out, but it's impressive that you kind of jumped on it. So how old were you when you...
So I was 23 when I closed my first deal. Really green. I didn't know anybody who was investing in real estate. Really, like my brother had bought a multifamily with a couple friends at the time, but they weren't really giving me projections on rental income, things like that. I remember the real estate agent told me, this condo would rent for $1,600 a month. I took him at his word. It definitely didn't rent for $1,600 a month. And, I had some negative cash flow in those first few years, but I actually bought a second property about 6 months later with 5% down. And I had, because I figured, I have $10,000 that could maybe buy me up to 200. I'll see if I can do another 5% down. Mortgage broker said, yeah, I could. I went looking, I found a property. And then on closing day, another thing I wasn't aware of is that there's this thing called land transfer tax in Ontario, and you get a credit on your first purchase, but not on your second. So I remember being at the lawyer, being baffled and confused by the costs on the closing documents. And I had to close the property purchase on my credit card to cover the land transfer tax. So I was actually at negative about $4,000 ish when I closed on the second property.
Negative. Oh, you're saying you were extra
To
extra
my name.
4,000?
Yeah, to my name.
Oh,
I
okay,
had no
okay.
savings at that point. I was losing a bit of money on the first property. I bought the second one. I had under projected my closing costs. And then all of a sudden, I had my first renovation ahead of me. It was a single family home. So it was an interesting time for sure.
Yeah, I can definitely relate to what you're saying because I know when I got started, that was one of the mistakes I made was not properly planning my cash budget. Like you get so excited you want to buy a property and you don't remember that, okay, well, once I put that down payment and I still need money to live on,
Yeah.
I still need to pay my bills. I probably like you at the time was just so excited to get started, and that concept of just changing my financial future. I was just so set on that, like I'm gonna do things differently. I'm gonna retire wealthy one day, and now I'm starting right now. And for me, it was a whole lot of get started, and then now what? I'm like, I'm in. I got two properties, and now what?
Yeah, and I think it's funny. Your investment strategy changes as you go deal to deal, and also you start to learn what are the levers that really make your portfolio grow. And in the beginning, I think a lot of people, when they're investing in real estate, the number one thing they're thinking about is appreciation. Where should I buy? What's a good market that's going to appreciate in value? But in reality, when you're actually investing heavily, you realize what are the levers I need to hit to allow me to keep buying, keep growing, whether it's a raised value through forced appreciation, whether it's a certain cash flow to cover all the rental costs so that you can continue to buy through major banks. There's different levers aside from appreciation that are a lot more important in investment. And I think that's kind of the biggest learning you get once you get a few deals under your belt.
So when you say levers, you basically mean a mechanism that's going to help you generate wealth through real estate, and there are several different mechanisms.
Exactly. So let's say, for example, you buy a brand new single family home that has 4 bedrooms and it breaks even every month. Okay. You actually break even every single month. You don't make any money, you don't lose any money, but that single family home is appreciating at, a 5% rate or 6% rate. Or if you buy a property, let's say a duplex that maybe cash flows $600-700 every month, and it's only going to appreciate, let's say, a 1 or 2% rate because it could only be sold really to another investor who wants to make cash flow. Well, the four bedroom home might look like the better deal because it's going to make more money in terms of appreciation, but maybe that duplex covers its own costs and you're able to buy another property with the bank after. So there's more of a long-term plan with some of these other levers, having enough cash flow to satisfy your deal, cash flow to cover expenses, depends on how you want to manage these properties as well. There's a lot of different facets involved in real estate investing.
Yeah, and I would tend to agree, and I think that in order to make your decision, you have to take that step back and say, what is it I'm trying to do, right?
Mm-hmm.
Some people, they work a full-time job, and real estate investing is really just something they want to do on the side, semi-passively, where they're just going to retire one day and they'll have a few properties. Hopefully, they're paid off,
Mm-hmm.
and then at that point they could sell them, go on a vacation, invest the rest, and live off the proceeds. So that's one strategy. And then there are other people who are like, I want to do this as my occupation.
Yep.
And those are the type of people where you're going to be doing some form of buying and selling if that's your occupation. And then there's some in the middle where they still work their jobs, but they're constantly doing this BRRRR method where you're going in, you're adding value, and then you're going back to the bank afterwards and you're hoping to pull as much, if not all, or even maybe some extra money from the bank when you're all done.
Mm-hmm.
So you're pulling that money out and then you can just keep using it. And Jacob, I'm sure you've kind of crunched these numbers yourself, but if you've got a 30-year mortgage and you've got cash flow now in 30 years, what happens?
Well, cash flow is going to increase after you've paid off that mortgage. That's for sure. You can keep extending the amortization, get your payments lower and lower every 5-year term. There's a lot of ways to leverage that mortgage in order to exceed your cash flow. If your cash flow on day one is $1,000, it's probably only going to grow from there.
Yeah, you typically cash flow grows. That's the nice thing. Like, I mean, there are some sporadic markets where you could see rents go from, $1,800 a month on a single family down to $1,400, right? So that's why when you're investing in those type of markets, if there's some volatility, then it's really good to have a buffer, right? So in case it goes down, you can ride out the storm. I always talk about riding out the storm with valuation, right? If you're in a market where you're not cash flowing and then the value goes from here to here, so it drops, then you're not really going to like that very much. And then you're in a position where you can't sell the property and it costs you money. That is an ugly position to be in. I like it when maybe, I haven't really been in this position. Well, I have a couple of times, but it was for different reasons. But, when the market's down, it really doesn't bother you at all when you know you've got that cash flow. So, but what I was getting at is, yeah, like 30 years down the road, it's kind of the polar opposite retirement that pension will do for you, because most people's pensions, like you work, and say you're making 80 grand a year, and then you retire, and most people take a drop. So they might be down to 60 grand.
Mm-hmm.
So now they have all this free time and less money. And I don't know about you, but when I have a lot of free time, I tend to spend more money.
Yeah,
especially when I'm
absolutely.
hanging out with my fiance.
Yeah.
Yeah, so it's just a really interesting strategy, and that's what got me into this. And I know your story, obviously that probably played into it as well. That one day it's going to pay off, and you're going to be in a great position.
Yeah, and I think that, your long-term views of your real estate goals, your portfolio, all these different things just evolve deal to deal. When you start to realize, oh, there's this strategy I didn't know about, that opens the door to doing a lot more. Maybe your investment goals turned in from, I want 5 properties that's enough to retire off of. Or now it goes, okay, no, what, I can actually buy a lot more than 5 properties, and maybe I want to buy 30, 40 and pass them down to my children. Right. Your strategy will change quite a bit as your knowledge and ability and confidence change with your investing style.
Absolutely. And another thing I would point out, just because this is one strategy we didn't really, or one part of it that we didn't really touch on, is that every property is going to have a value one day, right? So I talk about paying it off, but you're in the mortgage business, you know this. If you go back to the bank and just keep pulling more money out, so say your property goes up in value another couple $100,000 in the next 5 years, going back to the bank and pulling out up to 80% of that value, you can now take that money and buy another property. And the way I look at it is, if they're all on 30-year AMs, 30-year amortizations, you're 30 years away on every property you own from it being free and clear. And, if the properties are 600 grand today, 30 years down the road, they're going to be worth like 100 or a million, maybe even more, right? So every single property has the ability to make you a millionaire one time. And then you just keep doing that. I mean, how powerful is that?
It's extremely powerful. I think that you get a little bit of success with your portfolio, and you're constantly looking at these investors who have bigger portfolios than you, and you start to forget about how much success you actually have and how much financial security you've really built up for yourself, type of thing, right? But real estate just has so many benefits. I even talk about some external benefits. I pursued a master's degree when I was 25 years old. I would have never had the confidence to pay $40,000 in tuition had I not had equity in houses, right? So there's other leaps you may take in your life, leaving a job you don't love, pursuing a business, something like that. There's a lot of things that the financial security of real estate might lead you to do in your life that are going to have some big benefits outside of just wealth building and things like that.
Yeah, well said for sure. What did you take? What was your master's?
Oh, I did my master's in data analytics. So if you look at businesses nowadays, no secret, they're collecting data on your iPhone, at the cash register, at Shoppers Drug Mart, what you're clicking on their website. So really what data analytics is just collecting all these data points, finding a way to bring all these data points together so you can actually apply high-end statistics to make predictions on what customers will do. So you got to be a math brain for sure. There's a lot of engineers in the program. I think it's really, really interesting because every business is going this way. So even in real estate investing, for example, we know that data is so valuable. So just one tip for the listeners, maybe you're considering doing an Airbnb style investment, something like that. You can go to a great website. There's one called airdna.co, and it gives you all the data for Airbnb website or Airbnb listings. So with Airbnb, all you have to do is follow the data, and you literally cannot go wrong on your investment.
Yeah, this is going back to something I've been just beating over the head, I'm sure. But yeah, follow what other people are doing. If the data is there, if the analytics are there, follow them because they're telling you something. Now, AirDNA, that's a cool tool. I've used that as well. Part of me, I don't know. I question whether there might be an angle where you can beat the numbers on AirDNA.
For sure.
In my strategy with real estate has always been to be the nicer one, to always like to kind of push the boundaries of what's possible in terms of rental income, rental rate. So I'd like to try that and actually see if I could push the market, but I'm kind of curious to meet a few people who are doing it so that I don't make a whole bunch of unnecessary mistakes.
Yeah. And I'll tell you one funny spin off of doing that master's degree as well, is that when I moved to Toronto for that master's program, the thing that caught everyone's attention was that I had been investing in real estate, because in a bigger city like Toronto, buying a bunch of property, that's something that just isn't a regular occurrence for people in that market. So what ended up happening was I moved to Toronto. I got my first JV partner out there who I met, and we did 3 deals together. And then I just did another JV with a fellow student from that program. So this program has done more for my real estate career than it's done for my actual career. So it's just fine. You never know how kind of the domino will turn next.
So joint ventures, and that's a perfect lead in. This is unique because on this show, I have not yet had a guest go into joint ventures in depth. And that's what I'd like to do today. So why don't you tell me when it happened? When was the first joint venture? How did it come about? And, what deal were you able to do as a result?
Sure. So I'll tell you kind of how I got introduced to joint venture. Should we do a quick recap on what a joint venture is, do you think, for the listeners?
Let's recap it one more time. Go ahead.
Yeah. So just for anyone out there listening who's never heard of this, or maybe you have a rough understanding of what a joint venture is, typically what a joint venture is this 2 partners coming together to purchase an asset. In this case, that asset's real estate. So in a standard joint venture deal, you have a money partner and a managing partner. What the money partner does is they provide the full down payment and they finance the property in their name. Whereas the managing partner, they find the property, execute the strategy, set up the mortgage, do the bookkeeping, manage the tenants, deal with the maintenance requests. They essentially do absolutely everything involved in the property. And the way the financial breakdown works is that the investment partner always gets their down payment back when you sell the property, but any cash flows you bring in, any principal pay down and any appreciation of the property is split 50-50. And on the flip side of that, any expenses that you incur from the property are also split 50-50. So even though you might not have put any down payment in, if the roof needs to be replaced or something like that, you are on the hook for 50% of that expense. But if you buy, a strong enough property, typically your cash flow will handle any type of expenses.
And just a quick note to add on to that. There are a bunch of different ways you can do this. So it's really, so don't think of it as black and white. This is one of those things where it's all up to you and how attractive you are as an investor, or even a wannabe investor who's just about to get started. That's attractive too to somebody who's got money and no time. Mm-hmm. So you might be able to negotiate a deal where you do an 80-20 split and you get 80% of the upside. But I mean, more likely when you're getting started, you'll probably work something out 50-50.
Yeah.
And Jacob, how do people structure these? Do they use a lawyer or what have you seen people doing typically?
So a lot of different ways of structuring this. I think 100% there's got to be a lawyer involved in some aspect. So you're going to have what's called a joint venture legal agreement. And that's just kind of an agreement that outlines all the different details within your partnership essentially. But that's really it. I think you guys sign it together, put it together, put the agreement together where you agree on the terms. Like Andrew mentioned, not every JV is going to be that black and white strategy. Different people bring different things to the table. But I think the most important thing is that both partners get their own independent legal advice and have a lawyer vet that agreement so that everyone's on the same page. But once that agreement's signed, you're essentially protected and you're ready kind of to move forward.
And what did you have to pay for that agreement, if you don't mind me asking?
I didn't have to pay anything for mine. The reason being is, there's a lot of real estate investors who are willing to share what they do, templates, documents, things like that. So I originally got this joint venture agreement template from another investor who's done a lot of joint venture templates. And then just being having done a lot of transactions myself, I obviously have a really good relationship with a lawyer at this point. So for them to vet that agreement, they're not going to charge me any money. They know I'm bringing several deals to the table. So that's where kind of relationships come into play.
Yeah, and that's, on that note, so lawyers bill based on the hour. So if you can bring them an existing document versus having them create it,
yep,
you are going to save big money, right?
Yep.
And if you're talking to your lawyer or a lawyer, if you don't have one yet, maybe ask them, do you have them? Do you have one? Have you done this before? Because that's going to dictate how cheap you're going to be able to get it done. Mm-hmm. And I really wouldn't want to work with a lawyer that hasn't done it before, because they're just not going to understand. They're going to spend a lot of your money.
Yeah,
they're going to spend a lot of your money going through the hurdles. So, that's something you could probably even work out because before you do the agreement, you're going to have a handshake with your joint venture partner, and you guys are going to say, hey, part of this is going to be the joint venture cost. We're going to roll that into the cost of property number one, mm-hmm, and hopefully we do many more under that agreement. Okay, so you've really nail down what it is. And you were obviously the working partner. It sounds like a lot of work. I'm sure you'll tell us some of the tricks you've done to manage that workload. But tell us about the first deal you did in JV. Where did that come from? Who was your Well, you don't have to tell us who, but where did you find him? And let's go from there.
Yeah, so my first joint venture partner, if you talk to people who've done a lot of JVs, it will typically start in your personal network. So friends, family, friends of the family, cousins, whoever, it will probably start there because those people trust you the most. So my first JV was with a cousin of mine I wasn't that close with, but lived in Toronto. That's where I was doing my master's, and we tended to get a little bit closer when I lived out there. She's a lot older than me, maybe like 20 years older, something like that. So a lot more established in her career with kids, a successful person, understands that there's a lot of value in real estate, but doesn't necessarily have the time to execute the deal on her own. So she was pretty aggressive and interested in doing something with me, and I was showing her some opportunities in the market and what her returns may have been had she invested with me early on, and it was kind of a handshake agreement from there type of thing.
Yep, and those are nice. I like the handshake agreement, and I've done a lot of different types of stuff with people in my network along those lines of the joint venture partnership, and a good relationship starts with a handshake. And I've been fortunate to have people who trust me enough that a handshake was good. However, I will say that you absolutely, no matter how much trust is there, have something on paper, because God forbid something should ever happen to you.
Mm-hmm.
If you don't have anything on paper and you go out tomorrow and you get in a car accident or what have you, you've got to think about those people that you're invested with and make sure their interests are protected. And that's just human decency, I guess. Like, you want to make sure that, especially their family, friends, you don't want their lives to be so complicated by that if it were to happen. I know that's a morbid thing to think about, but it's important.
You never lose by operating like a professional. I think
Absolutely.
that's the theme, right? I think a lot of times, even just like as a mortgage broker, if I'm dealing with one of my friends, it's very easy to get more casual in the application process and the way I'm dealing with them. But I think what I've learned kind of early on is like you always have to be a professional, always dial up the professionalism. You'll never lose by kind of following a process and sticking to that.
Absolutely. Well said. Okay, so you found your second cousin, first cousin?
She's my first cousin, just a lot older. We got a big family. Yeah,
Cool.
a lot of stories behind
That's
that.
great.
Well.
That's great. No, we don't need any more details than that. But why don't you tell us about the deal now?
Yeah, so our first deal was we set it up. I was actually, so this was a little bit unique. I was actually the getting finance for the mortgage. She was bringing the down payment to the table. Okay, so typically I don't do deals like that anymore, but it was my first joint venture. I didn't really know what was going on. So, I can get approved for a certain mortgage amount, and she was going to bring the down payment. That was good enough for me at that point. Mm-hmm. So just went looking for a property and purchased a duplex that needed a bit of work in East Hamilton. So we purchased that. We had the first unit rented before the property even closed, just by doing showings during the walkthroughs. And then the second unit got rented pretty quick. We were cash flowing about $800 a month right away, and it only required about a $8,000 to $10,000 renovation. So that was a quick, easy deal, and we immediately got started looking for a second property. So then probably about 5-6 months later, did another deal with her, and then what happened was I was kind of taking a break from real estate, but kind of the way I operate is I'm always looking for real estate, and if the deal is correct, I'll try to bring in the money partner at that point, even if I'm not actively looking with somebody. So I came across another really good deal, maybe about 6 months to a year later. That was kind of one of those, I have to buy this property deals. And luckily have the relationships in place. I wasn't a mortgage broker at the time. So I reached out to my mortgage broker, said, hey, if we refinance these other properties, would we have enough equity room to put a down payment on this place? He told me yes. I called her up. I said, hey, I have this great opportunity right now. I really want to put an offer on it. If you don't want it, I'm going to go potentially in with another investment partner to let me know. She was on board. We ended up closing up this deal, and that was how I got to deal number 3. But being in the mortgage profession, working in real estate will give you access to partners, right? It's just another tool of networking. So I have a lot of clients where they're looking for rental properties for a year, 2 years, something like that, and they never close on something. Those people are great candidates to potentially be a JV partner, because maybe they just don't have the time to go put in the resources and looking for deals kind of thing.
Absolutely. There is such an opportunity out there for those of you who have not done anything. Just your tenacity can make a deal. You do the research, you come down and you sit them down all excited, say, I found a building, I've done the numbers, and you are ready with all the objections they might have and what you've already done to mitigate those objections, you can close the deal that way. Even if you have no experience, tenacity can do it. Now, I will say, make sure that you are doing a smart deal, because it's one thing to gamble with your money. It is an entirely other thing to gamble with somebody else's money. Don't gamble when you invest in real estate.
Yeah, and that's the tough part about you go to these seminars and a lot of people are talking about buy real estate with no money down, buy real estate with other people's money, all this stuff. But if you haven't had a demonstrable success in real estate yourself, is it responsible to take someone else's money for a deal? I think, a lot of people would have different answers to that. I don't think it's necessarily a hard no, but I think, if you're somebody where you've had no track record of success in your actual career, and then you've had no real estate experience, I think your first thing you need to do is have some type of demonstrable success, whether it's real estate or somewhere else, just to build confidence that, somebody would actually take that leap with you.
Or even if you've got somebody that's helping you, right? Like if you're getting started and you're referencing what somebody else is doing that is working right now, and you're saying, hey, look, I'm doing the exact same thing, like to the T. This is working right here, right now. I talked about confidence in the last episode. And confidence is something you should listen to. Do you feel confident? If you don't, there is a reason. And you need to correct that. That's your gut, right? What's your gut telling you? Do you feel comfortable taking your family's money or your friend's money or whoever it is, knowing that, this is a relationship you've got? And I'm of the opinion that you do it when you know you're going to win. Mm-hmm. You do it when you know you're going to win, because it's not fun when you don't. It's not just you involved, right? So definitely a very valuable tool, but bridge your gaps, right? If you have a knowledge gap, bridge it, do the work, make sure you figure it out.
And that's the thing, right? You said, you're going to win. Never has there been more access to information in real estate than there is today. Everyone's willing to share. There's mentors around every corner. There's online resources. Like, to break down the numbers of a real estate deal is not rocket science. If you can't figure out the numbers, then like Andrew said, educate yourself to bridge that gap, because the information is very readily available out there.
Absolutely. And, I talk a lot about quote unquote stalking people who are successful, legally, of course. And it's this podcast is an example of that. Like, Jacob's a guy I would have probably reached out to anyway and said, hey, let's go grab a coffee and chat. Well, instead of just grabbing a coffee and chatting, we're chatting on a podcast. And these are the questions I would ask anyway. So you get to listen to this for free and learn. And every piece, it's a compounding effect, right? You listen to this podcast on the daily, or one day I'll get to daily episodes, but you listen to it, and each day you pick up a little something. Other podcasts do the same thing, and then one day it's like you have an answer to every question somebody asks you, every objection. You're like, oh, I know how to handle that. And Jacob's going to talk to us about property management as well. We're going to go through one of his deals, and you pick up these little gold nuggets along the way. It's I can't express how those relationships in my life have been so valuable. Just people who are doing it, just constantly listening to them day in, day out. And my fiance's mom, my future mother-in-law, she was this real estate tycoon when I met my fiance, and I'm like, what a coincidence, I'm interested in real estate. It was like the stars aligned. I actually worked for her as a mortgage agent. I got my mortgage license. I still have it to this day. And I used to just sit in her office while she'd make phone calls. She'd be making phone calls, and I'd be sitting there on my computer doing mortgage deals, for homeowners. And it was just like, wow, I got to see how somebody who thinks in massive numbers does business on a daily basis. And it's like, I was a sponge for that kind of thing. And I highly recommend, take this opportunity, be a sponge. Jacob, you'll give your contact info at the end. If you want to connect with him, you'll have that opportunity as well.
Yeah, and I think we should probably delve a bit into executing a JV. So there's one thing to have somebody who's actually interested in partnering with you, but what do you do once you're shown that interest? How do you actually close on a potential joint venture partner? I think that'd be something that maybe people would benefit from. What do you think, Andrew?
Sure. Yeah. Tell me the story. It sounds like you got something in mind.
Well, I definitely got something in mind, just because you're going to get interest. Now, I don't want you to lose that interest by not having a plan in place when that potential joint venture partner comes about. So there's a lot of things to do once you have interest. But I think the most important thing is, especially if you have real estate experience, build out a spreadsheet of all your properties, the return on investment on all your properties, and simply just input that joint venture. Had they invested 20% down with you on all those deals, what their return would be today. Now,
Oh, this is Jacob's close. Okay, everyone has their own close.
yeah,
We're learning here.
this
Okay.
is my close. So I'll show them kind of, I won't project the future. I'll just show them what they've already missed out on. And if you've been
Fantastic.
investing in real estate in the last 4 or 5 years, you probably have a lot of appreciation in your portfolio. So this is a really, really powerful tool to use. But what I do to take it one step further is I just compare the returns to had you invested in the stock market and gotten a 10% return consistently throughout that time. And if you've done well in your portfolio, hopefully your investments smash that 10% in the stock market return. And that's a really, really eye-opening piece. And then you're going to have investment partners who, you know, they're not as aggressive as, let's say, my cousin. I have some other partners where they don't know as much about real estate. So they take maybe a bit more timid approach. So one of the things I think is most important is you sign a letter of intent. It doesn't bind anybody to anything, but what it says is we are going to buy a property in this price range in these said neighborhoods that's going to rent in these price ranges. That way, when that great opportunity does come up, it's, hey, we said we are going to buy this property in neighborhood A and it will command a rent of 16 to 1800. And, you know, it fits all the criteria we previously discussed. Because the thing is, we know with real estate is that if you come across a great deal, how much time do you have?
Not much.
Not much.
You know, and this is a great topic. I know my friend, he actually closes people with the putting it in terms of what they can do with the money. So he'll get to know the person he's working on closing, and like say he's working with a bike enthusiast. You know, his one buddy loves bikes, and then his other buddy loves like classic cars, muscle cars. So his buddy wanted to buy a Dodge Charger, and he's like, well, he actually wanted to buy a new one, muscle car. So he's like, well, actually, that payment's going to be $700 a month. If you invest X with me, that's exactly what you're going to get. And so how would you like to have that car without a payment? How'd you like to just get that car and have no payment? And that was his close. Okay. So, and I think the point that you know, Jacob's really getting at the analytical minded people, right? The analytical minded people see the percentages and they know that. Not everybody responds to that, but obviously the people you're kind of gravitating towards do. So for if you don't feel like that's your bread and butter, always put it in terms of what that person's interests are, right? If you know people are you know, they have a real passion, find a way to make that passion happen for them. And relate it to what you can do with them in real estate. And that's you know, then you're not even really selling them. They're just like, oh yeah, absolutely, let's do it.
Yeah, that's a great nugget. That's really good. Putting it in terms of things that would be important to them. You know, you look at a family who maybe doesn't have the time. Well, guess what's a big cost that's probably coming on their horizon 20 years from now when this house might be close to paid off. Their kids are probably gonna be going to university.
Yeah.
There's a lot of costs that are coming up. Retirement. Everyone's a little bit worried about retirement. That's a little bit tight for everybody. So I think you made a great point there is put it in terms of what they're going to get out of it versus just numbers on paper.
Numbers on paper don't sell people. It's all emotional, right? Like, I mean, granted, people are so emotional about money to begin with, which kind of helps. It kind of helps sell that. But if you really want to have success and you want to push your success from, you know, belt high to sky high, you learn how to put it in terms of them and what it is that they want. Yeah, and you mentioned kids. That's a trigger point for people, right? And you know, it's so valid.
It's true though.
It's so valid.
True. It's not manipulative.
You gotta pay for tuition and education. Man, people lose sleep over that. I mean, if you can help solve that problem, and that is a problem with what you're doing, that is how joint ventures and other forms of investments that you can get, you know, your family and friends into can actually help them, right? The caveat being, take care of them, make sure that their interests are protected, and then you never go wrong. So yeah, gold nuggets. I love that we got into that. That's definitely valuable. And what I started to learn, and I learned that from my friend, it opened up this level of confidence, and just seeing him do it, I'm like, whoa, man! Like he'd have people, like he'd have his so his son's friend's mother, and his son was like 5 years old at the time, ended up doing a deal with him. Mm-hmm. They were just talking at you know, when he was picking up his kids from school one day, and oh yeah, this is what I do. Okay, well, I'd love to get involved. Okay, boom, deal done. When you get that level of confidence, once it's happened a couple of times, you start thinking about things differently. And I've been able to do this kind of thing, and I'd go into deals, and I actually would operate a little differently. Like I wouldn't sell somebody on a deal until I knew I had the deal. And a lot of times I just tie the deal up and I'd say, well, somebody's going to do it. It's a good deal. So I'd
Yeah.
focus on the deal. I'm like,
Yeah.
no matter what, I know I'll get somebody. I'm more concerned about the deal. And, I'm not recommending that. I think you got to start where you're comfortable, right? That comfort didn't happen overnight. That comfort happened because of experience.
And you need a network to take that approach to some degree,
Yeah.
right? But I agree. I've done some where I purchased a property and, actually I have a funny story regarding that. So I put my back against the wall one time. I saw a four-plex property out Niagara Way, and I was like, the numbers on this property are so good. This is hilarious. Like, there's so much upside and it makes really good money right now. I'm definitely going to put an offer. So I won the property in an offer competition. I had no way to finance it by myself, but I figured, you know what, there's no way I can't find a partner for this because it's such a good deal. So little did I find out about maybe an hour after we won the offer competition is I found out that one of my clients actually bid on the same property.
Oh, great.
And then I just JV'd it with my client. I just decided to his name and JV'd it with him. So, if you're doing the right things, you're approaching the right properties, everything's going to fall into place probably pretty easily.
Well, sales is about confidence, right? Like the hardest sale you'll ever make is selling yourself, right? And that's where the confidence comes in, right? You're never going to sell anybody on investing if you are not confident. So you were sold enough on the deal to offer on it without even knowing who was going to finance it. And that was why it was so easy for you to put the deal together, right? You had that confidence. Again, I can't recommend that to anyone getting started because you have to trust your gut and where you are and where your confidence is. Because otherwise, it's not going to turn out well, right? You got to make sure you're covering your bases. Listen to your gut. Your gut's there for a reason. Okay, so is that the fourplex you were going to tell me about? We had
not the Niagara one, but I did. Yeah, I think I was alluding to it a little bit earlier when I mentioned refinancing one property, close on this one. So that was the one. Yeah.
Okay, we got a good one. So why don't we lead into that, and then we'll roll into the property management discussion after that.
Yeah, no problem.
So Jacob, you had a fourplex that you bought. Why don't you tell me what you bought it for?
Yeah, so this was I think it was my fourth or fifth house I bought. I can't really remember now. I bought it for $580,000, four units, all over 1,000 square feet, 3-bedroom units, and severely rented under market value.
And how did you know? Like, you did you find this on the market?
Found it on the market. So I think one thing that real estate investors you learn after a couple of years is that if you're like me and probably like most listeners and probably like yourself, you probably look at the MLS every single day.
I do look at it a lot. Yeah.
Multiple times a day, maybe. So those people, you don't realize that you're collecting so much data in your head and subconsciously you know what a good deal is. It's very clear when something's a very good deal if you've been taking in that much data for that much time and you've been investing and doing things. So I came across this property. Actually, my realtor sent it to me. He said, hey, this just came up on the commercial MLS. It should be on the realtor MLS. They made a mistake. I booked just a viewing for it already. It's amazing property. You have to go see it.
So commercial MLS doesn't show on the residential side. And with something like a fourplex, a lot of people look on the residential listing service and they're not looking on the commercial. So there's a little loophole where you might be able to find a deal if a realtor makes a mistake and doesn't list it on both. They should list it on both, but sometimes they don't, right? Because some people just go to the commercial listings and they look fourplex, fiveplex, sixplex. But other people don't ever even go on that. So yeah, you lucked out there. So you found yourself a pretty sweet deal.
Found ourselves a deal. The deal was still going to be in an offer competition. So it came on the market on a Thursday. And then we had the viewing it came Thursday night. We had a viewing on the Friday morning. The offer competition was set for the Wednesday of the following week on the property. So when we went there was tons of groups walking through the house. Every single unit was disgusting, scary. The guy who lived in the first unit had been there 12 years through 3 owners, had an existing beef with the current seller. The unit number 2 is actually unit number 1's son who had moved out 5 years ago. Unit number 3 was unit number 1's other son.
So it was mismanaged is what you're saying.
Severely mismanaged. And then there was a 4th unit who had just jumped on. So they were paying on average about $850 a unit. So I guess between 4 units, that's $2,600 total for the property.
Okay.
And then, obviously the condition of the units weren't great. Tenants are a little bit scary. And that was the condition of the property.
So mismanaged is one of my favorite buys in theory, right? Because mismanaged means there's nothing wrong with the building. There's nothing wrong with the area. You can fix mismanaged. You can't fix a bad area, right?
Exactly.
Well, you can, but it's expensive.
Yeah.
If you want to fix a bad area, buy this street.
A lot of houses, yeah.
By the street. And I've seen people do that. I've seen with deep enough pockets, I've seen a developer transform an area. But you're not going to start there. So you can fix mismanaged. You got into something where it was a 580 purchase, and you got a mortgage on that. We're not going to get into that right now because that probably just confused the numbers a bit. But long and short is you had to put some cash in, about $116,000. You said
down payment.
Yep. And that was money brought in with your joint venture partner.
Mm-hmm.
Cool. Okay, so let's dig into what you did.
Yeah, so property was listed at $529.99. We bully offered it on a Saturday night for $580, $50,000 over the ask. They declined our offer. The Sunday, they actually didn't do showings of the property, which would have been the busiest showing day. But the reason they didn't do it was because it was a Mother's Day, and the seller, bless her heart, really nice lady, did not want to show any of the parents' units on Mother's Day to allow them to be unobstructed on that day. So what we did is we came back the Sunday night with the exact same offer at $580 again and tried to bully offer the same price, and they just accepted it second time around.
Nice. Okay, so for those who aren't familiar, bully offer is when a seller sets a date to review offers. They say, we're going to review offers on Thursday at 2 p.m. Make sure you submit it by then. And then you go in with an offer that expires before then, a very, very quick expiration. So you might only give it 4 hours. And you give them a number over what they're asking. And then you put fear into the seller's eyes. Well, this is a good offer. What if we don't get better? And believe it or not, this works. Yeah. And there are some, sometimes with an estate sale or something, they'll literally say there's zero way we can do a bully offer. Like there's a regulated process. But I would say most scenarios where I've been in multiple offers, the date has got moved up. What they'll do is they'll get a bully offer and they'll be like, okay, everybody interested? We got tonight. A bully offer. Submit your offers now. Mm-hmm. Yeah. So it's slimy a little, I guess. It feels slimy when it's being done to you and you're the guy who wants to bid on it. And then you got bully offered out of the mix. But hey,
it's part of the game.
Part of the game, man. Just exactly. If you don't like it, try harder, get creative. Mm-hmm. Creative deals make you more money. If you can see value where others don't see it or where others are not looking. I've done that. So we'll get back to the four-plex, but just since I'm on this thought process, there was this neighborhood in London, Ontario, where I was doing a deal, and I'd been doing stuff in that area. And there was the one side of the street that was heritage protected. So it was a heritage neighborhood. It didn't mean that you couldn't do stuff, but there was a regulated process where you had to get approval if you wanted to build an addition. And I found a house, and what the rule was, if you had wood framed windows, you had to keep the wood framed windows. So you couldn't switch to vinyl. But luckily I found a house that already had vinyl siding, vinyl windows, steel door. So I wasn't changing anything. I was replacing like for like, and therefore they had no concern. But because this neighborhood had all this red tape, the people who wanted to come in and buy and renovate and like add space, they weren't looking at it. So I managed to get this property for probably like $70,000 less than it would have been if it was on the other side of the main street. And that deal, long and short of it, was the most profitable deal I've ever done. And,
yeah.
And that's just being creative, right? Seeing value where others don't, right? Or being willing to learn. So for me, I had to learn how to deal with the heritage examiner, the heritage, I forget his exact title, but I just got on a chummy relationship with him. I really, I emailed him. I'm like, hey, like, I just wanted to get your feedback. This is what I'm thinking. It was a lot of hoops to jump through, but he was good, and I learned how to handle it and got it done. So
yeah, and I think the theme there with that is that if you're looking for property, maybe don't pigeonhole yourself so much to specific neighborhoods and just kind of take in everything. For me, I get automatic listings sent to me for 3-4 different cities, and I don't have limits on neighborhoods and things like that, right? I want to see everything because something might stand out to you that wasn't recommended to you. And like you mentioned, there's a lot of value where everybody isn't currently looking, kind of thing.
Yeah, see value where other people aren't looking, right? If everybody's frolicking to one specific thing, there's odds are you probably need to start getting more creative.
Yeah.
If you're right in the mix of that, it's hard to make money because I've said this before probably, but there's always somebody willing to work for nothing, and they don't even realize it. They will get into a bidding war. It just happened to me. I just bid on a property. Well, actually I was going to bid on it, but then when I got there, I realized there were a couple of things about the property that wouldn't work for me, but I was following it, and my realtor sent me a note, and the property listed for $229. And it got 55 offers, 55, and it sold firm for 352. So over 100 and well, about 130, 120 over ask. And I've seen worse, actually.
I
I
was gonna
have.
say for that many offers, I would think it would go even higher over
Yeah.
ask than that.
Yeah, I thought so too. But I mean, here's the problem. That house fixed up is worth about 400. And this house needed windows. It needed new flooring. It needed a brand new kitchen. It was like wood paneling, never been updated, like disgusting house, like needed new bathrooms. You could not renovate that house for a price that would allow you to be in it where you're in a position where you have equity. Like you would basically be losing on that property in the short term if you were to sell it. Now, if somebody's buying that for their home, it's an emotional decision. And hey, I'm not faulting anyone for that. If that's the decision you're going to make, great. But as an investor, if we're competing against that, that's not a good place to be.
No, no, absolutely not.
That's insanity to me. That's just like, okay, well,
It feels good. I think it feels good when somebody bought the house for a price you wouldn't pay for it, because then it validates your decision to not put in an offer. There's nothing
That's
worse
true.
than there's 5, 10 offers, so you do not submit an offer because you're like, oh, this thing's gonna go way over. Then you see what it sold for, and you're like, oh my god, you're kicking yourself because you should have put in an offer on the property.
Oh yeah. I know. I find that's a tricky subject. Sometimes you don't want to waste your realtor's time and
Yep.
put an offer in, like, because I know the number I'm comfortable with, but I'm feel like the realtor, he knows that that's not going to work, so he's just like, let's not even bother.
Yeah.
I think you still got to take a swing, right?
Mm-hmm.
You miss 100% of the shots you don't take. So, okay. So back to this example, and I'm sure we'll go on many tangents. So you bought for
580.
580. How much was your renovation?
Renovation cost was 30,000.
What did you do in the 30,000? Because that's not much.
Yeah, so typically I use contractors to do my renovations. In this situation, there was kind of like an eviction situation where we didn't know if we're going to be able to evict the tenants or not. So as a result, it's hard to line up a busy contractor if you don't even know when the project's actually going to start. So we got pretty lucky with evictions. Maybe we'll talk about that a bit later.
Yeah, let's do that.
But so for 30,000, I brought in tons of different trades, guys, really narrowed down the prices, materials, all that kind of stuff. I did flooring in 3 units. So 3,000 square foot laminate, bought and installed 3 units, painted 3 full units, updated just light fixtures, 3 units, new doors and baseboard trim on all 4 units. And then 3 bathrooms. And that was it.
Wow, you did well. Do all that for 30?
Yeah, I got some really cheap people. At the same time, I had to fire a couple people off the site as well, because when you're dealing at low price points, sometimes you're going to get that type of value in return.
Yes.
So it was a lot of stress, a lot of trips to IKEA, Lowe's, all these different places. I had like a Mazda 3 at the time, and I was just loading that thing up with boxes.
Oh, that's a great story.
Yeah, it was. I remember the funniest thing was when I actually picked up the laminate. So I brought these guys to do the flooring. They're really cheap, really professional. They said, we're doing it right now or we're not doing it. It's like, holy shit. So I ran to Home Depot. I rented one of their vans. We loaded like 2,000 square foot of laminate in there because we couldn't do more than that. It was jam filled. Driving the Home Depot truck, it's beeping on the road because overweight capacity.
I've had that.
I don't know what's going to happen. This thing's going to shut down. What's going to happen? I end up bringing it back to the house, and I'm lugging in this laminate into the property, like, a couple thousand square feet. So got a good sweat on for sure.
Oh man, I used to have it figured out. I forget the number now. How many 2x4s I could fit in my Hyundai Sonata? I'd have people on the site looking at me like, "You're gonna destroy your car."
Yeah.
And they'd be up on the dash. I'd fold the seat back, like feeding them through the trunk onto the seats. Not smart things to do for the value of your car, but
yeah, but no, I had a couple funny things happen in that renovation. I had one of my tenants doing the work and did 2 of the bathrooms for me. I found some tile in the house that the previous landlord was going to retile the bathrooms. That was nice. So I was able to use that. So I was pretty resourceful for sure.
That's great. Yeah. And if you're willing to hustle like that, yeah, you can get great deals. And when you're starting, it's especially important to hustle like that, because when you're starting, you can't afford to be wrong, right?
Yeah.
Once you get some volume and you have a whole bunch of properties going on, it's okay if you make a little bit less on each one, but you're doing 10 instead of 1.
Mm-hmm.
So anyway, so your $30,000 reno, then we bought for 580, bought $30,000 reno, so you're in for 610 total.
610, yeah.
Now you finance some of that, but let's just look at it as a hard number, 610. What was your new appraisal? You went back to the bank, right?
Yeah, went back to the bank to refinance. That was a challenge in itself. We could only find one lender who'd do the file because my JV partner was pretty maxed out in terms of mortgages. Okay. So we had an appraiser come through. The property appraised at $760,000.
Okay, so 760. How much was the bank willing to give you as a percentage of that?
80% loan to value. So 80% of that would be $608,000 back.
So 608,000 when you've got 610 into it. Well, if we just do some simple subtraction, you were into the property net with 2,000 of your own money, approximately.
2,000. It cash flows $1,500 a month, so I'm paid back pretty quickly on that deal.
Well, yeah. So you're paid back instantly because you didn't put anything in. But
Yeah.
but your joint venture partner, their return on investment. Let's just calculate that. So you've got 1,500 a month, which is insane, by the way. Good work. That's $18,000 a year. I actually didn't use a calculator for that, so hopefully that's right. Then we've got, I did a calculation. I just calculated this before. So 3% is approximate mortgage pay down. So when you're talking about mortgage pay down, that's every month you make a payment on your mortgage, which is interest and principal. There are complex amortization charts you can use, but what I've found is that 3% is actually a pretty good estimate. 3% of your principal tends to get paid down in about a year, depending, and that will vary. It's not a science. But so if it's 3%, that's about $18,240 a year being paid down on your mortgage. And then you've got passive appreciation, which is just your property going up in value. You've probably seen like 10% or something recently. But if we're just being conservative and we say, your property's going up about 3% a year, that's another 22,800. So that's 3% of 760, which is your new value. So your total return across those three things, so you've got your cash flow, your mortgage pay down, and your passive appreciation, your total return is $49,040 on something that you have $2,000 into, plus some time.
Yeah.
So you got your time, right?
Mm-hmm.
So when we're calculating return on investment, we take $49,040 over $2,000, which is approximately 24,000%. So that's a little bit better than the 2% the bank gives you on your savings account.
So that's the new expectation for my joint venture partners moving forward.
24,000%. No, see, this is where these numbers start to get insane. Like, you're borderline. If you had got $2,000 more on your refinance, we wouldn't even be able to calculate a return.
Yep.
Because you'd have nothing into it. There is no investment. So this is where that BRRRR method gets insane. And I've actually had a deal where I was able to pull money out. Like I actually pocketed money and had zero in. I did 2 properties back to back where between the 2 of them, I was pretty much net zero. Like I had a little bit in, maybe like $6,000 between 2 properties that today are worth $650 a piece.
Yeah, and with this one specifically, I only renovated 3 out of 4 units. So we still have a 4th unit, 3-bedroom, really nice, not renovated, and rented maybe about $700 under market rent.
Wow, so you've got some potential to
There's more potential with that as well.
All right, you got to find me one of these deals.
Yeah, me too.
Spread the wealth, man. Okay, so I love this deal. That sounds great. Now, what did you do in terms of rents? Like, did you get these tenants out? How'd you get them out? And what's your increase on rent?
Yeah,
overall?
so this is the thing that made the whole deal go. So the evictions were really what made the deal so valuable, kind of thing. A lot of times we talked about this off air before we started filming, but we know that there's ways to force the value of a property by putting capital in through renovation, but there's also ways to raise the value by managing it better. So maybe evicting a bad tenant, bringing in a good tenant who pays a lot more in rent type thing. That might not cost you that much money. It might cost you nothing at all. So with the caveat with this property is a lot of the people who are inquiring about putting an offer were asking if there could be vacant possession. These tenants were scary. Nobody wanted to deal with them. So with us, we kind of realized that this landlord's tried to evict these tenants in the past. It hasn't worked. She's not going to feel confident that she can close on her sale if she has to guarantee a vacant possession. So all we asked her was a 60-day close, and we simply asked if she could serve eviction notice, but she didn't have to guarantee the vacancy. So she was happy to do that because she wanted to serve notice these guys because they had so many problems throughout the ownership of the home. So she basically served eviction notice to 2 of the 4 units. She served eviction notice to 2 of the 4 units. And I would be driving by the property before the close, just seeing, are there moving trucks out there? Has anything happened? Nothing was really happening. But the day before the close, I took a cruise by the house, and there were moving trucks everywhere. Everybody was leaving. And we actually got 2 of the 4 units evicted. So that was a huge win right off the bat. They were paying $875 and $850. Those units now rent for $1450, $1425.
Wow, with just some flooring and paint.
Because the kitchens were actually new in these units, which is the funniest part. The landlord put in new kitchens before she sold to try to raise the value. But if the rents
Amazing.
aren't accommodated, that doesn't really do much for her sale price.
Yeah, this is the beautiful thing, and I always encourage people to, if you're going to be buying properties, well, obviously as an investor to hold, they're going to be rental properties, but even if you're flipping, because when people buy an investment property that is rented, they're looking at the income.
Mm-hmm.
So and this isn't an exact science, but if you're familiar with cap rates, say you were working with an approximately a 5% cap rate, and that's just a rate of return. So I'm not going to get into that right now as to what it is and how you calculate it, but you can just Google that. Cap rates are really straightforward. But so say that's what you're working with. If you get $100 a month extra on a unit, that's about $25,000 in value. So all you have to do is kick a tenant out, and maybe if your unit is $300 under market, a fresh coat of paint, maybe $1,000, and you kick them out and you put the next tenant in there at $1,000. Now you've increased your property's value by $75,000. It's something that was nothing more than a few phone calls and hiring somebody to paint your unit, and that's where it gets crazy. Because people, like you said, they don't want to deal with the tenants. A lot of people have this fear, like, oh, I need vacant possession. I don't want to deal with that. But guess what? Everyone else doesn't want to deal with that either. Mm-hmm. So if you're the guy that's willing to deal with it, it's kind of like my heritage example. Now all of a sudden you're getting a creative deal. You're seeing value where other people see a problem. And I think reiterating this discussion is refocusing me into my next move, what I need to be doing.
Nice. And I think I got a really good anecdote for this story. I thought I wasn't going to tell it, but I think I have to because it's a really funny story regarding this property. So we had the father in the first unit, his son in the second unit. They both were evicted or left, I guess, on their own when I took over possession of the property. So the third unit was actually a freshly signed lease. So they were only in month 2 or 3 of their new lease, and they were paying $850. That unit now rents for $1350. So again, significantly under market value. So when I took over possession of the property on day one, I had to go to this unit and ask for the cash for the rent. So when I show up there, she doesn't have the cash. So on day one, one of the tenants has not paid me rent. So about a week later, I was by the property looking at the boiler, just having somebody check out some of the components of it. And don't I notice there's a couple cop cars in front of the house, and one of my tenants is getting arrested directly in front of the house.
Oh, beautiful.
So having a tenant getting arrested directly in front of the house, I'm like, oh, this is hilarious. Like, I'm a pretty positive guy, for me, like, I know this is gonna be a funny story to tell later. I'm not stressed out about it. I'm not the one getting arrested, so this might help my eviction process. Who knows, right? So I'm chatting with the neighbor who's actually the seller of the property while this is all happening, and she said, oh yeah, just so you know, that woman in that unit, she has a pig.
Like a pet pig?
I'm like, a pig? Like, what do you mean by that? Like a little, like, I don't know, a little pet pig? I'm like laughing. I don't even believe it. And she goes, no, a full grown pig. She goes, the other tenants are complaining about the smell of it. Here's all the paperwork. I tried evicting her for it, all this.
Oh my God.
In my head, I'm howling. I'm like, there's no way there's a full grown. I've been in the unit. I never smelled anything. I didn't see anything that like a farm animal would be living in the unit. So
smells like money.
Yeah. So as that's happening, doesn't a van pull up to the house, and 3 strange women start coming out of the van with like a big cage, and then doesn't my tenant come walking out with this full grown hairy pig walking out of the property?
Oh man.
So anyways, that was pretty bad. So I took that opportunity to chat with the tenant after, and I just kind of let her know, like, hey, you got a couple young kids here, your boyfriend's getting arrested at the house, you have 3 dogs, a cat, and now apparently a pig. Do you have any family? Like, what's going on here? Because I'm concerned about the children at this point. There's a baby and there's a toddler, and they're living in this crazy environment with these animals, a guy getting arrested at the house, and just one stern life talk, and she moved out 2 weeks later to go live with her family and get her life back on track.
Wow. Okay, so I think we should dig into that, like, because I know that for even myself, the thought of doing larger multifamilies, my concern has been getting the tenants out. Yes, I've seen situations where we're under market, and obviously a lot of people don't want to put in that effort, but there are rules here, where we are, there are rules about being able to kick people out, and tenants have a lot of rights here in Ontario. So you kind of have to go the way you did it, and you have to kind of motivate them or help them see their own motivation to leave, don't you?
Yeah. And I said, you know what, I just framed it the opposite way. I said, look, you got 8 months left in this lease. Your boyfriend just got arrested. Who knows if he's going to be back? So you have your kids living in this situation. I'm willing to let you out of the lease if you're out of here in 3 weeks.
That's interesting. And she was good with that, right?
I didn't believe she was actually leaving until she was actually gone. Like I didn't believe it was actually happening. And we signed the appropriate paperwork, things like that. So she legally had to leave. But again, I would say that that's an extremely lucky circumstance. We've all heard things go the opposite direction, but that's just an example of I got 3 out of 4 tenants out. I didn't have to pay a single dollar.
That's an important lesson, is just be decent with people. I had a set of tenants that were on a 2-year lease set up by my old property manager, which I didn't even realize he had done that. Never told him to. He just did it. And then when my fiance and I decided we were getting married, that was going to be basically paying for our wedding. So we decided, okay, we'll sell that one. And I was kind of thinking about selling that one anyway. That one wasn't in line with the rest of my portfolio. So I decided to sell it, but we got these tenants in there, and I talked to the realtor. He's like, yeah, best value on that place is vacant. You know, with the market right now, we want it vacant. So I go and talk to them. I'm like, look, I realize you guys have another year, but I wanted to ask if you'd consider leaving. You don't have to. I didn't try and tell them they had to. I'm like, I can't force you to. But what I can't promise you is if I sell it, that the new owner wouldn't expect you to leave. You know, the new owner's probably going to be moving in, buying it, and moving in. So they're going to tell you to leave anyway. So I'd rather you guys be able to do this on your own terms, and you'd be helping me out too, because I'd rather just sell it vacant if that, you know, if you guys are willing to work with me. And they said, yeah, sure. And I'm like, I'll help you. I ended up paying for a garbage bin, so they could throw out their stuff, and they left. And yeah, I mean, some people say, you know, like you, didn't cost me anything, but even if it did cost you, you know, a few $100 to just help them out and get moved, if you're fair with them, then they'll be fair to you. But if you go in there and you're like, you got to get out, like you try and lie to them and pull the wool over their eyes, you know, the second they figure it out, you know, they're going to make your life hell. So I say, be fair with people, work it out, show them you're a human being. And I think that they'll be fair back. That's been my experience. Have you seen the same?
Yeah. I think that, you know, you're going to be decent to your tenants. I hope. If you're anyone listening to this, like you're probably gonna be decent to your tenants. You have a good temperament. You're not too flustered by little things. You'll probably be pretty fair to your tenants and have compassion and all that kind of stuff. Same time, there's a line where you can't be too lenient about certain things.
Oh, correct. Yeah, definitely.
Or you're gonna get taken advantage of.
Yeah, that's the other side. Yeah, because especially with the students, right? I deal with students, man. Like the stuff that gets said, you would not believe sometimes, and you just have to have your responses. You be fair, but fair does not mean you're a pushover. You know, I had one tenant. I had them on direct withdrawal. So they're on auto withdrawal. Her bank stopped the payment, took it out of her account, and was holding it in limbo somewhere. You know, I made all my calls, and you know, the company that provides the service to me, they're like, no, it's with her bank. She needs to do it. She calls me. She's like, your company is scamming you. They stole my money. I'm not paying anything. I don't have to do this. I'm like, well, that's fair if that's the way you feel, but I'm just going to have to treat this as intentional non-payment of rent then. She's like, well, what are you saying? You're going to evict me? I'm like, no, I'm just telling you, I'm going to have to treat this as intentional non-payment. And that changed the tone of the entire conversation. And then she ended up calling her bank, and I had the money. I didn't get an apology, but I did get the money within like 2 hours. So it was okay. You know, so you can't be a pushover, obviously.
No, and what I do too is, because I have investment partners, I'm constantly playing imaginary good cop, bad cop with my tenants.
Oh, I love that.
And blaming it on the investment partner.
See, my partner expects this. You know, I'm sorry, I have to stay true to him.
Yeah, you know, they want me to issue notice. But I said, hey, you know, you've been a really good tenant. I don't want to issue notice.
Yeah. Hey, good cop, bad cop is excellent. There's another way to do that. You know, I think that's a great way to start. And then down the road, like you just kind of find your angle. And then it works. So getting to property management, you mentioned to me that you're self-managing, and I think you're up to like 17, 18 units now.
17 units, yeah.
How do you do that, manage all your JV relationships, and keep your sanity?
Yeah, so I would say systems processes are really, really important. But one thing I will say that's been, I think, you know, many people would think this is a negative, like a disadvantage. I've actually learned to believe that this has been my greatest advantage. Okay. So one is I do everything by myself. So because I do everything by myself, I have to create systems that can accommodate scale. Whereas if you're a team of 2-3 investors buying things together, one guy will take on the bookkeeping, one will take on the tenant relations, one might take on the maintenance, and you don't necessarily need to build good systems when you have that structure in place. The other thing that I really benefit from is that I don't know how to do any handiwork whatsoever. So it actually benefits you to not know how to, fix your plumbing issue or fix your electrical, because it's not going to be painful for you when you have to pay somebody to go do that at your property. There's a lot of people where, electrician might charge $100 for a quick fix, and you can do that yourself, and it's painful to pay that electrician. I save myself a lot of time because I don't go to any of my properties. So for me, for example, over time you build up good relationships with different tradespeople, plumber, electrician, general handyman, things like that. And I've definitely, gone through the rotation with a few different people, but 4 or 5 years in, I have very good relationships now. So the way I set up any issue is if a tenant messages me, says, I always use like there's a leak in the sink, something like that. I send a text message to the handyman or the plumber, whoever's appropriate for the job. They coordinate a time to show up with my tenant. They'll fix the issue, send me the invoice. I'll send an e-transfer.
Yeah, so you just pay them, and I do something similar where I've got it. Part of it is the system is actually coaching your tenants to know what to do, right?
Yep.
So maybe have a laminated form on their fridge saying, in case of emergency, you're not calling me.
Yeah.
You're calling the plumbing HVAC contractor, right? So I have that where it's the plumbing HVAC contractor is 24 hours, and you can call them middle of the night. They will show up. They'll send me a bill in the mail, the email. Who mails these days? So they send me an email, and then I just send payment back, and it's so easy. I can pay on my credit card. I've got a couple of handymen, and then what I've done is I've moved away from a property management company, but I have a lady that will help me out with renting. So I'm an hour and a half away.
Yeah.
So she'll show the property. She'll charge me a half month's rent. So it works. I don't need to use her, but we have a good working relationship. It's worked out nicely. So in line with your model systems, right? So you've got a system, you've got a process. Coach your tenants, and then I don't like leaving the payment in the tenant's hand. So I would look for a direct deposit service that you can access. I've used something called PendoPay. I don't mind saying that name. I don't get anything for that. I wish they had an affiliate link. I'd promote it, but no, I don't know. I'm not really looking to advertise at this moment, but yeah, they've been good. So they'll just take the money right out of my tenant's account, and because I have 5, 6, 8 students living in one house, depending on the layout, that's a lot of payments, and a lot of people I'd have to call, say, hey, where's the money? Or like, hey, can you please send it? So I would highly encourage that. Try and get as many as you can on direct withdrawal, because people just forget.
Yeah.
They just forget. And if you're waiting for them to send you a transfer every month, it's kind of just irritating. First of the month, I want my money, man. Give me my money.
And I hate, when they're changing the password and they're asking these questions that are so random to answer. What's the address? Is it the full street name with the number? Are there spaces? Are there not? There's always these dumb questions. But I think I really recently laid down the law with all my tenants, and I sent out a whole code of conduct. And it's if you have a maintenance request, it comes by email.
Yes.
That the house is not burning down, you do not need to text or call me.
Exactly the same.
Thing,
exactly
right?
the same. Yeah, I did the to the T that exact thing.
And I think it's important too, because everything's documented a lot cleaner that way. We tend to lose text messages. We tend to lose that stuff a lot easier. If there's a dispute between a couple tenants and they're emailing you about it, then you have it in writing if you do need to take the necessary eviction process, whatever it is.
Yes.
One thing I hate doing when it comes to property management is the bookkeeping. I can't stand bookkeeping. When I get an invoice, I'll pay it, but just to create a file folder for that invoice, to put it in an Excel sheet, to do all that kind of stuff. I really can't stand doing that, especially because being a mortgage broker, your phone, email, everything's getting blown up all the time, essentially. So to have that happening with my tenants or contractors as well, a bit annoying. So what I've done recently, which I'm experimenting with, is hired a virtual assistant. So you can get a virtual assistant online really cheap, and they can do some basic tasks for you. So I give, for example, this virtual assistant, they'll log into all the utility companies for all my properties.
Smart.
They can track all my bills. If I have tenants who pay a percentage of the utilities because they're not split up with the property, they will email the tenant with the invoice saying what percentage they have to pay.
That's cool.
Right. Yeah. And then in addition, I'm just forwarding every invoice I receive to their email, and they're storing in a Google Drive file folder for every property.
Nice. I do something similar. I do have a question though. Is your background in business? Did you take that in school at all?
Business, yeah. Commerce background, yeah.
That's actually a huge detriment in a way to guys like yourself, you and I. I took business as well, and we understand accounting and finance very well. So we want everything on Excel. We don't want to use a tool like QuickBooks or something.
Yeah.
I've switched recently, And again, I'm not getting paid, although I wish I was. I switched recently to QuickBooks, and you wouldn't even need the virtual assistant if you just,
Really?
yeah.
Really? So what's the difference with QuickBooks? Because in my head I just assume it's
Yeah.
another version of Excel.
Yeah, you know what? I am going to try and profit from this. If you're interested, I think I can get you a slightly larger discount if you actually want to switch. If you're somebody listening to this and wants to switch, because I'm already a buyer or a subscriber. Basically, yeah, it's just the ability to just like if you have something. Here's my process. I have receipts. They sit on my desk, and this is how I know I need to file them because they sit on my desk until I do something. I scan them in. I open the QuickBooks file. You can literally tag it to a property, so I can locationally tag. It connects to my bank account, and it'll match the transaction. So if I say I spent $33.39 on these plumbing supplies, it'll pop up on my credit card, and QuickBooks will be like, "We found a match." Click match.
Oh,
Boom.
unbelievable.
And then you can attach the receipt to it. So and then I can actually share that with my accountant. And at the end of the year, like, this was the first year where I didn't have to spend, and I'm not exaggerating, about 120 hours of bookkeeping before I could send it to my accountant.
Wow. Okay, so that's
Yeah.
that's good because that's the missing piece, and what I'm doing is connecting it to the bank account transaction.
Yeah, and a true account reconciliation, only really bookkeepers do that. Us coming from business school, we never really did that kind of thing.
Mhm.
So, that's one of those things where if you want to scale, I would highly recommend doing that.
Wow. Okay.
Yeah,
Good.
yeah, that's
So this was worth doing just for that little
yeah.
nugget alone, I think.
Yeah, no. Send me an email. I'll send you. I got to profit from that in some way. I don't like to give plugs otherwise. Anyways, no, that's actually not true. Because I'm going to let you do a plug right now. This has been very educational. I learned a lot actually, and I'm sure our listeners did too. Been a pleasure. So, Jacob, if somebody would like to reach out to you and learn a little bit more about what you do, or maybe even talk to you about some mortgages, what's the best way for them to get in touch?
Yeah, so I'd just say, just off the cuff, if you ever listen to anybody on any podcast and you're interested, then you think you may be able to learn from them, definitely reach out. Everyone's really, really willing to share information, so please reach out to me. Best place to contact me, you can get me on Instagram, Jacob Perez 10. I post a lot of different real estate related content on there. You could email me at jacob@jpmortgage.ca, or just find me on LinkedIn, whatever's easiest, and be happy to connect from there.
Sounds good. Now, I've been told I should incorporate a couple of rapid fire questions
Nice,
to
okay.
finish things off.
Sure.
So I'm thinking of them as you're answering them. Okay, so favorite food.
Favorite food? Maybe you can go with sushi. Pretty simple, but sushi or ice cream too. You can get them both in the same place if you go to one of these all you can eats. That's probably my favorite.
If you were to take a dream vacation, what would the location be?
That's a tough one. I think with my life right now, my idea of a vacation is just going somewhere and being alone. Something like that. Like I would like just go to a beach somewhere where nobody knows, and maybe just read a couple of good books and do some meditation, things like that. Just take myself out of my world for a little bit. That's kind of my dream vacation right now.
Interesting. And would that be favorite hobby as well?
Favorite hobby, I think I really, really love personal development. I'm obsessed with like becoming who I want to become, whatever version of myself I'm trying to attain at that point. So favorite hobby, probably just either reading a good book where I learn something, or socializing with friends over a few drinks. Do that as well.
Nice. Okay, you handled those well. Okay, so for anyone wanting to get in touch with me, you can email me at andrew@andrew-hines.com. I'll put the contact information for Jacob and I in the show notes. Thanks for listening, and we'll see you on the next one. Hey, Andrew Hines here, and I just wanted to take a moment to recap today's episode. That was amazing. It was really nice to have Jacob on the show. His story was exceptional, and I think it was very educational for everyone who is listening, including myself. A couple of housekeeping items. I have switched my Instagram handle for those trying to find me. I am now at the Andrew Hines. So that's the Andrew, last name Hines, Hines. That's the best place to get in touch with me. Come follow, shoot me a DM if you'd like, and we can chat there. Thanks so much to everyone who has been sending me feedback. It really means a lot to me to know that this is impacting people and it's helping people. And I wasn't sure where this was going at first, but with every episode, it gives me a little bit more more oomph to want to keep going with it and to keep really pushing this and spreading the word. So if you haven't already, if you would kindly do me a favor and please just subscribe to the podcast. Click that 5-star review, and if you wouldn't mind leaving me a few words in the review on iTunes or on Google Podcasts, any of the above, and then share it with a friend. Spread the word, because I want to get this out there to more people. It's going to help this show grow and ultimately help me to do more of this. Maybe I can get some sponsors to help me with some of the audio editing and hopefully do more podcasts. I'd like to get this up to a daily podcast as soon as my timing will allow for it. So thanks again. Really appreciate you listening, and we'll see you on the next one.